So that's it. That's us again, me, Leo, and Jose.
Hey, how's it going, man?
Doing fine. And you, my friend?
Good. A little bit sad because we just got the news that Disney is cutting 7,000 jobs, man.
Oh man, why that?
Yeah, Mickey Mouse is letting go 7,000 people.
That's sad. So I need to go see Mickey Mouse, see if I can help him.
Yeah.
Maybe
Yeah.
if he watched our show, he can do some trades and hire back these guys. I don't know.
Yeah, exactly. Just hire back people, man. That's
Yeah.
tough.
How what are you doing this week? Trading, what you're looking for. So give us that magic again that you gave us last week.
Yeah, well, I'm still on the same positions. Actually, I'm looking very interesting to see what PayPal is going to do next. Actually, tomorrow, let's see what PayPal will do. That's one of the things I'm paying attention. Also, I'm looking see if this move after hours on Walt Disney, it's up 7.89%, almost 8%. If it's going to hold. And also, I think I'm still looking to buy a little bit of Google. Google, they have this situation where I think the demo that they have for the AI Bard didn't work as well as the Chat GPT. So the stock dropped 7.44%. It's kind of tricky, but I still think there's value. Yeah, it dropped out. Google, the stock dropped. It went down 7.44%. But if you have a time horizon where you want to invest between a year or 2 years, then I think that's a perfect spot to buy Google if you want to.
Yes.
Yeah.
One nice thing that I heard about this new technology is that this AI is going to be able to connect to the internet and say stuff that is updated, not like just Chat GPT that I think is up to 2021, if I'm not wrong. And
right.
Another thing that I read is that also this new technology is going to be added to the Google search. So every time that you search something, the first thing that you see it's a output from the AI, and then the results, the search results. So I think this is a breakthrough that we are looking for, because if you look at where we were in terms of technology and computers, yes, we get faster, but we are doing the same stuff since, I think, 1960, since we changed from valves to transistors. So it's mainly the same stuff, faster, but the same technology. And maybe this new approach, AI stuff, can give us what I don't know how can I put this, but what we are pursuing as human beings that have a machine helping us, and maybe using this leverage this knowledge even to not just help us to write nice copies and nice ads and stuff like this, but use this to help us developing new texts and stuff like this. So, for example, hey, ChatGPT, write a better way to do some stuff. Because if you think, for example, airplanes, we are trapped in an old technology. See, airplanes haven't developed. We are doing the same stuff. And if another thing, if you get, for example, cars, and if you compare cars to computers, right? We're flying with our cars, but we still with our tires on the road. So I think this will help us, and maybe that's the thing that I like about this capitalism, because one company does one thing, the other one needs to do better, and the other one needs to do even better, and that's us that win in the end. That's it. So
yeah, absolutely. I think that what you said right there, in capitalism, there's this constant challenge, constant battle. Like Remember when Netflix was the king of streaming wars? There was no one there, right? And then they started popping a lot of HBO Max, Disney Plus, of course. And then that forced Netflix to kind of find something, right? Find that niche, find something to improve, and they made this. They jumped into video games, right? So now, if anyone is listening to us in Brazil, just check your phone. The latest update on Netflix for the phones, you have video games. I don't think you have it for the
Video
TV,
games?
the smart TV. Yeah, but they actually now have video games on your phone. So, and the reason for that is you have to think video games have a component which is like the challenge in how you beat the enemy, and you kind of grow your character, and you have to overcome different challenges, right? A movie is something that you have some kind of free time, you want to entertain yourself, you want to disconnect, and then you watch a movie, right? But then
Yes.
you can see that power of being a full digital company on Netflix, because the stock now almost recovered and it's trading at the $372 per share, where in the case of Disney, from $200, it's still trading around. I mean, right now it's 121, which is almost 8.70%. But my point is, you have to see how these companies. Disney challenged Netflix. Netflix stopped gaining new subscribers. So now you're in the position where, okay, where do I see these things going? So you can always invest half, some in Disney and some in Netflix,
Yes.
because those are the two leaders. You don't have to go all in one particular stock. You always have to think like, okay, how can I find an opportunity where I will make money on this one, right? So actually, I got some call options on Disney during the weekend, right? And they're doing good. They're doing relatively good. Okay. So that has been very good. So the idea is Disney, Netflix, well, a little bit of both. And right now, a lot of what's happening is, at the end of the day, you have to think like they're firing people. The fact that American companies, they just have to put some PR out there. I fire you, and the stock goes up, shows you what is corporate America. And you have to be careful, because you really have to, as an employee or anyone that is watching this, you don't really have to be scared. What you have to be concerned is that you have the skills, and that you know exactly that you can trust your skills and trust yourself to find to go, if you have to, if it happens to you, to go back, go out there, back into the labor market, and back to find a new opportunity, because that's just the name of the game, right?
Yes, I also saw that another company, I think Zoom, it's also cut 15% of jobs, and if you put things in perspective, looks like all these cuts in jobs are. 1 second.
Yeah, go ahead, man. Words.
If you see, this start happening after Elon Musk did this stuff with Twitter, and
oh yeah, big time, man, big time. Yeah.
Yes, and made shareholders realize that this paradise that tech companies is that you do what you want, you work when you want, and you just have to deliver. Maybe it's a problem. And another thing, if you think, some time ago we had negative interest rates around the world. So you don't need to worry about if the company is generating revenue. You just have to worry about equity. And right now, things are different. So the people that are getting this money, they need to pay it back. So they need to make profit from it. So I think we are going to see more of this. And as it's extremely negative for people that lose their job, but that's not our point here. But looking only from the perspective of investment, this is amazing, because you realize that a company can do the same job and we have a less cost. So
right, absolutely.
This will reflect on the price of the stock of the company. And I think right now, maybe one thing that is maybe can be good for us to take a look is, for example, we get companies from the same sector, and that does the same stuff like Netflix and Disney. Okay, and we do compare. We can create a metric, for example, the profit generated by one employee. So let's say we get all the profit, we divide for the employees, and then we get a number, and we can compare these two, and maybe we can have a glimpse of each of the companies will cut jobs next. Okay,
right.
So, and maybe this is the company that we that it's cheap yet. I'm going to do this as an exercise this week, because looks like these things of cutting jobs is a trend right now after Elon Musk did this on Twitter.
Yeah, and you have to think like one of the catalysts for Facebook, now Meta Platforms, the ticker META. It was pretty much like they came out in the Wall Street Journal. They published this whole thing like, oh, Meta is letting go 10,000 people. And it was like, bro, Meta has like 90,000 people. So, and after that, the whole thing went from $100 to 120 in less than 5 days. I wrote about that a little bit in English for a few clients in the States, and we catch that trade. And what I think it was probably a 7x, 12x trade. So, but the idea was that at the beginning, people were thinking like, oh, we're going to let you go. But you have to think like in Silicon Valley and all these tech companies, the bare minimum or minimum wage for poor people working in those companies. And I would say poor people in a very sarcastic way. But when you fire someone at Google, that head count, it's $150,000. It's like $100,000 base salary plus $50,000 in bonuses. So every time you let go someone, think about this. If you let go $10,000, you have to multiply that by $150,000. That's a lot of money, man. It's a lot of money. So in reality, you do save. And then it's true what you're saying, Leo. I think whether people hate him or not, or they don't understand what he's doing, what he did at Twitter basically was like this. Hey, how many people is we have here? 8,000. What? Drinking kombucha, playing pool.
Yeah.
So he came in and he was like, and he pretty much, he did like a fire sale or patio sale, and he put all that machine stuff out like, bye, you guys are here to work. Now people will say like, what about the employee? Well, look at what's happening, man. Look at what's happening. So a lot of that, I think, happens because of the over excess of consumption during COVID. A lot of people thought that we were actually growing, but in some sectors, like in electronics, like 2 years later, when you look at MasterCard rate of consumption on the period, at least in America, in the US, from November to December, the vast majority of the consumptions via credit card, according to MasterCard, went into restaurants, like people going out. But when you look at electronics, it was like minus 5% compared. I mean, like there was no growth in actually people using their credit cards to purchase electronics. Why? Because they're full of stuff, man. There's no more stuff that we need, right? So you don't see that growth. So Elon went back to these tech companies and was like, we're too many, man. So he went from 8,000 to almost 2,000 people. Even some people were joking that they only had like 1,500 people working. And then a lot of people on Twitter, because that's how people are like a little bit like sarcastic, and maybe not sarcastic, but people were like, well, if Twitter stops working because they don't longer have that many headcount, they were not really talking about engineers. It was just like, oh, the company was functioning with $8,000. We think the company will stop functioning with less than that. But then you have a Twitter where you probably have a headcount now of 2,000 employees, and it's still working. And actually, it's working better than ever.
Yes.
They have more. Yeah, they have more upgrades. Not everything it's nice, but you have to think like, I think it was a joke that Telegram had on their Twitter. I think it took like years. It was something like 2-3 years from the last time Twitter actually had an update. That was how bad it was. It was really, from the perspective of an engineer, it was really, really embarrassing.
Oh, I saw a video this week of one girl that works on Twitter, and then she went to work, but when she got to the work, she was stressed because the train was full. So she went to do some yoga before start working. And after the yoga was almost midday, so she went to lunch. And after the lunch, she did another stuff inside the headquarters. And suddenly it was 4 p.m. So she replied some emails, did some calls, and get back home. Man, this is worse than public service in Brazil. This is unbelievable. And
it was a good ride, man. I mean, honestly, those engineers that ride that train for like 3 years, good for them, man. But now for those guys that were just not performing at their best, trying to get a job, it's tough.
Yes.
It's really tough because they're not prime talent. They weren't really performing. So it's not like, oh, you left Twitter and then, I don't know, Google is eager to hire you. It doesn't work like that.
Because, yes, it's not like, oh, the guy left Twitter. No, the guy.
No, it's not like that. It's not like that.
It's we don't want you because you were lazy, you were not working, and you were full of shit. That's the truth. That's the truth.
Yeah, exactly. So that's the paradigm that basically you have these guys where they thinking like, oh, I'm a great engineer. Yeah, but you work at Twitter, bro. That's where you work. You work at Twitter. Yeah. So that's what it is. And then, for example, when you look at stuff that's happening out there, you have to think you have like legendary investors like Ron Barron. Barron, he's the one calling like Tesla at 1,500. Right now it's trading. Actually, today it went as high as $202, man. That's huge. And then basically Ron Barron, I think he said, if it's not Barron, there's another of these big guys that he invested $100 million in Twitter in the private placement. I think that's what it is. So people that believe in Elon, they put some money. I think Catherine Wood is one of those as well. They pretty much put some money into Twitter being private. So there's some investing going into also into Twitter.
Yes.
Closed doors. So I'm pretty sure he's going to make that money back. Not now, because the market is not really like the most attractive market. Everyone has a lot of weird ideas about the market. But 5 years down the road, give 3 years down the road, he might come back with Twitter as now are being run by the team of engineers that he's running. So you might see a lot of good surprises in the future for Twitter coming back as a public company, where that will be a much better structure for the company. So there's a lot there to dig in. But definitely a lot of changes, a lot of demands, and people just to pay attention, a lot of understanding more technology, be more effective at your workplace. And it's not that people don't work, but what it is we always have to understand that you have to be competitive. And I think exactly what you just said, the fact that Elon did what he did at Twitter, everyone from Google to Microsoft, they're just like, either you perform or you're out.
Yes, he changed the game, changed the perspective. And in the end, he's going to make a lot of money. And more than the money is the branding he's making, because people think he's an hero because now we have the free speech under control. We can say whatever we think again. And but that's true. But I think that was not the point here. And another thing is he showed to people that still have doubts about his skills that he's amazing. I like Elon Musk. That's the thing. Okay, so everything the guy put the hands, it thrives. And with Twitter, it's not being different. It's pretty amazing. I think yesterday I got a notification when I enter on Twitter. It has a dot and what's written. What the is that? I thought that amazing. And that blue, that verified marks, now you can buy it.
Yeah, I mean, there's a little bit of that. Is like, okay, how you make this whole thing very successful. The understanding is, well, you have to charge people. And that was a situation that I think he had with Stephen Hopkins. That Stephen Hopkins told him, like, I don't want to pay. But why do the people think that things can be free? Right? Why do people think that good stuff has to be free? Yeah. It doesn't have to be. It cannot be really good if it's free. You need to charge, and everyone is entitled to charge based on the value that they deliver. And that's the reality when you look at what Elon is doing. Hey, I'm improving this. I just want you guys to, kind of help me to make it better. Yeah.
Yes.
So that's all it is. That's all it is. And some people were like, oh, I don't have to pay you. Like, just because he's rich, it doesn't mean that he has to give you Twitter for free. He has to make some money of it. And the fact there are some content creators that are happy to. And one other thing you have to think, Leo, is that now people can share revenue, because just recently YouTube opened their revenue share structure from the YouTube Shorts. That's a different story, because with YouTube Shorts, they're trying to compete against Instagram Reels and TikTok. So now content creators can do something like that. And some content creators like us, or I mean, we have our shows starting and everything, but you look at Mr. Beast and everything, those guys, like Mr. Beast has like $2 million invested in cameras, man, drones and cameras. Those are not just guys putting videos. Those are companies, like real company, warehouses, equipment. You have a camera crew and everything. So some guys, it's like new television, but independent television in an age that these guys are powerful as well. And for them to continue, they had to actually come with some of the structure of those TV stations like CNBC or, I don't know, Bravo or Spike TV, right? But the platform, the technology for you to kind of produce, deliver that content is YouTube. So my point is, there's more to come. You will see a lot of people think that there's going to be a shift in the companies that are right now controlling the market. I was listening to one of the best podcasts for finance, besides what we do. It's called Odd Lots from Bloomberg.
Odd Lots.
Odd Lots, yeah. And then they interview one of the guys that was in The Big Short. That wasn't a guy that actually ran a hedge fund that was part of Morgan Stanley.
Michael Burry?
No, it wasn't Michael. Was it the other guy? That was the one that Steve Carell portrayed. Oh. The guy that was very nervous and stuff. So he was on the podcast. I mean, the guy is very good. He's he's rich and everything, but he was talking about paradigms, how the paradigm changes. Okay, so today is one thing, and then you don't want to accept it, but that same thing today won't be in the next couple years and decade. Like, think about this, like the horse to the automobile. The horse was like, yeah, I'm beautiful, and they will never change me. They love me. But then people start having automobiles like that, right? And now you have that paradigm shift in the understanding that the future is not combustion engine vehicles. It's not. And then you have Toyota, like, yeah, we're going to do a hybrid. And Toyota was number one in hybrids. It was sort of like gas with something else. God knows what it is. And they just threw the towel, and they were like, you know what? We need someone to direct us in the right direction, because, yeah, we think hydrogen, but do we think really hydrogen is the way to go? It's not there either. So it's really electric. So you have that shift in the understanding of these new companies that will be in control. Now, what this guy from the movie said in the podcast is, people think like, oh, maybe the leaders of the last 14 years won't be there. But it's different, because with technology it's a little bit tricky. Why is that? Because Apple went to hook the URL based on iPhone, but then you have Apple Store. So Apple produced the hardware and also had control of the software. It's different from, for example, financial companies that were so popular before the great financial crisis in 2008, 2009. A lot of those companies, they were just banks. I mean, and there's limited amount of stuff that a bank can do. Bank doesn't really sell software or hardware. It's just financial services. So I think in this time, I'm not saying that the guy is missing the point, but I think he doesn't understand who he's dealing with. So you have Tesla. Tesla sells the hardware, but he's hooking you up with the software. You see, these are different companies, and most of these companies are very American. So same like Amazon. Amazon sells you the goods, sells you the server, sells you the marketing ads for you to sell the goods all in one place, man. It's crazy stuff, man. The guy went from selling books online to sell you servers and ads. The ad division, advertising division of Amazon right now, the rumor on the street is that they're making $1 billion right now. He started selling books, man. How you went from books to selling $1 billion worth of advertising?
That's crazy.
It's crazy, man. Crazy stuff in America.
And I was reading about him that it took, I think, 10 or 12 years to become a millionaire, and then 2 years to become a billionaire. This is an amazing guy.
Yeah, everything changes so fast. So fast, man. It's crazy. Crazy the amount of changes that we are experiencing right now in the short term. It's just crazy, man.
Okay.
What else you have? What else you have on the table?
Oh, I think
What currencies are you trading recently? What are you trading as far as currencies?
this week I did just one trade that was yesterday. After that spike we have in GBP USD, and I bought after we have. Let me show you exactly what I did. Let me see, where is it here? It was really a fast trade. As I'm working on the dashboard, I have not been able to trade a lot. So yes, exactly like this. After this spike right here, after this spike, I bought right here, okay, and I went out today on 1.1, yes, 1.21. So it was a really fast trade. But I have yes, let me see, yes, 80
pips, yeah,
a little bit less, 74 pips or something like this. And after I have been using this new strategy that someone asked me to code, and the strategy is pretty amazing. So I'm just giving a shot on it. And but let's see. Talking about GBP USD, let's take a look on the COT data for it. We didn't have any signals for COT data this week. And let me see one thing, GBP USD. Yes, also we don't have an expressive rise on the positions. Okay. So thinking about in terms of COT data, there is nothing relevant. There's nothing that is screaming for attention. And the net position is too short. We see, yes. So nothing that we can say we should take action right now based on COT data. And so I don't know for you, but this week for me until now it has been calm. So not a lot of triggers or stuff. Even if you take a look on the triggered signals for COT data, we don't have a lot of stuff. Most of this stuff is it's not relevant signals. I think the most powerful that we had, it's Mexican
peso.
Yes, and let's see. So this today is, so we are talking, so the signal that we had, it's called downtrend resumption. So basically what the signals tell us is we are on a downtrend, and exactly we are, and maybe you have seen some kind of pullback, and now the downtrend will continue. It's right here, downtrend resumption, and this
it makes sense.
Yes, this is a powerful signal.
Yeah, it's horrible, man. I mean, whatever pullback we had in the dollar versus the Mexican peso is set to continue lower, man. It's actually, it looks pretty bad.
Yes.
Go ahead.
When we have this kind of spikes on the COT index, can you see it's even colored? So this is telling us that, so we have one, I think since start of December.
Right.
The first one. Yes, 20th December. So since 20th December, what COT data is telling us, like, let me find okay, since 20th December.
Okay, the entry, yeah.
Yes, so since this day, what COT data is telling us is that yes, here. What COT data is telling us for USD Mexico is that the downtrend will continue, and we should remain short. And as you can see, that's a lot of pips. And one thing that I like to people to pay attention is for COT data. It's not a timing tool, because we get data on Friday and data is from Tuesday. Okay, so we have almost 4 days of delay. I don't know if you know about this. So all the data sent to CFTC, that is the organization that gathers the commitment of traders, is sent until Tuesday.
Right.
And they release this data on Friday. So we have this time, that we don't know what the speculators did. But as these guys have huge positions, and on the contrary of retail traders, they do not trade actively on this. They most do the exchange position. For example, they need to send money and get money back, buy stuff and things like this. So it's not actively trading as we do. Because of it, when we have some kind of we have a trend that is in place, this will not change from one day to another. This takes some kind of time. And so COT data, what I like to use is, for example, let's say you have a strategy. This strategy use RSI, I don't know, Fibonacci, I don't know. And the COT data is telling you, man, remain short. So what you did is you every time that your strategy tells you to buy, you don't do it. You go with the flow, because one thing that COT data does not lie, it's the flow. So you know where the big boys are going, in which direction. So it makes the life pretty easy. As you can see right here, the data. This is amazing, because you see that we are coming from a downtrend here. This is pretty cool, man. We are coming from a downtrend here, and then we have this pullback.
Yeah.
Okay.
I mean, that's the deadly pullback right there. That pullback in the
yes. And what COT data told us is on exactly this day. In fact, it was 23, because we have some days of delay. But what COT data told us is the downtrend will resume. So go short again. And this is amazing. That's the why I have this passion about COT data. And but right now I will let you speak. I stop sharing my screen.
Yeah. Now, we can go over the whole thing, and I think, like, for example, look at this. I mean, that's just a little bit of the neckline that is coming all the way from April 16. So the reality is that when you see this type of breakdown, this is the breakout. This is the breakdown for what used to be a massive bullish trend from April 2016. Once you have this here, it's over. It's not coming back. This thing is not coming back. Worst case, you have like the range, one of the range here, which can be from July 2017 to June. That's almost a year, right? That's 18% appreciation for the US dollar against the Mexican peso. But from this point, it's a sell. So you have to at least go down 3.26, worst case, right? And you go all the way back to 16.29. Now, that's very important because a lot of people think like the dollar, people in America, they want a strong dollar. You don't want that because exports are more expensive. People don't want to buy stuff from the Americans because producing in America is very expensive. But if your currency devaluates a little bit more, that's how you get a trade surplus. I can be making a mistake on that, but that's basically economics. The reason why China got so powerful is because they were selling so much stuff to people. So much stuff, right? Back in the days, people buying heavy machinery from Germany, very specific, very professional machines. I mean, a lot of the production that it's in China, it's actually produced with German machines. It's not just Chinese labor. I mean, they also have equipment. So the reality is that when you look at Mexico, hey, it wouldn't hurt for the Mexican peso to come all the way down. Now, also, you have here, that's the left shoulder, right shoulder, and this is the head and shoulders. So this is the neckline, really. This is just what's happening. So it's very hard for you to make a comeback like, oh, it's going to go up. Not really. So from this point, there's no use for another year where the dollar is very strong. So basically, you want to make sure this whole thing moves lower and goes all the way to these levels.
And if you think about the USD, general USD, and about what the Fed did with the interest rates, I think we are going to see a weaker the USD on the next weeks and months, and this trade makes a lot of sense.
Yeah, so the trade, one of the trade ideas from today's show will be just to keep short the US dollar versus the Mexican peso. That will be our idea. And I think medium term, I wouldn't be surprised for Mexicans to see the peso at 16.28, which would be, I think, a fair value for the exchange rate. This over here is too tight. And then, for example, if you look at this structure, look at this here. That was a massive triangle, man. Massive triangle back in the days. And that happened between 2008 and 2011. So it took about 6 years to this whole thing to play out. And when it did, it was powerful, man. It was powerful. Look at that. It was almost a 34% move to the upside. It was huge move. And that took from the breakout 2014 all the way to 2016, about 2 years of a breakout. And you can see that once you have the figure, a big monthly, weekly figure, it takes 2 years. Once you're out of that figure. And look at that. Here you see a lot of sideways, right? Prepping for the big breakout. But once you're out, the pauses, the retracement, the pullbacks are very tight, very, very tight until you finish the move. It was a 34% expectation. It did 34 here. And then, you see, look at that. Once it hit here, then you have one more time, and then you have the pullback.
And one thing that we should not forget, as we see this rise, probably at this time we have maybe I don't know no, I think this is wrong what I would say because it's United States. But if it was another currency, one thing that you also should get is the positive swaps, because it's not a rule, but most of the time when one currency goes rise against the other, we have this situation that we have a bigger interest rate than the other, and when we have this situation, we get positive swaps. But thinking in terms of United States and Mexico, I think this can be true. That's it. And this also was good for us to make this show, because I was completely missing this trade. And
yeah, you can pick it up. You can pick up the trade now.
Yes, in fact, I'm going to take. I'm going to take to sell a little bit of it, and okay, it's here. What else are you looking there, Jose?
That's pretty much about it. I'm looking for companies this time. I'll be looking at a little bit. I'm thinking about these companies, a small company, and some AI companies, some AI names are going around. This BBVA, but it's very overextended because it came all the way from 90 cents. So I'm going to take a look probably at this company, SoundHound AI. Very strong candle, 132% for the month. And then the weekly looks very bullish, looks strong. It's trying to make a move after hours, 464, 465. But what I do like here, if you take a look at the weekly chart, take a look at the potential breakout, because you can think about the levels of June 22 or pretty much July 22nd. If you take this, you can see how we have the structure, right? If you were to change this to a bar, basically you have the bar closing above, right? Above. And that's very important. So once you have that, you can have a duplication and look all the way for the next liquidity level at $8. So that probably will be a company I want to follow the next couple of weeks, trying to make a move after hours, 467. So that should be green. Yeah, 468. It's the plus 1.8% after hours. So it's getting a little bit, it's getting some hits. And that's the whole thing is the AI. Everyone wants to ride that train, and sometimes they're just some companies are just putting PR for the sake of putting out PRs and saying like, oh yeah.
Remember me the blockchain stuff. Remember every company.
Exactly. Every company. That's exactly right. You see, it's not 130. So the reality is that, yeah, that's one of the names. Probably this is the name I want to follow. I'll probably just play that name for a week, and then I will be looking to target, best case scenario, Thursday, Friday. If I get it 860, that should be a nice profit if it makes the move. We're looking at a 77% upside. And everything is about momentum. Sometimes you're just trading momentum. That's all you're doing. So in this case, I'm trading momentum. I'm trading the fact that it's a company that I cannot explain this, man. AI. That's all it is. Just like the blockchain, and back in the day, like 2 years ago, where everything was just, hey, it's a Bitcoin. Yeah,
yes,
let's do it. Yeah, exactly. So that's where we are right now. So that's a name that I want everyone to pay attention to. I probably want to make sure I don't pay more than $5 my entry, and I want to make sure I unload, get out of the trade, and at a nice profit at $8, if that's how far I can make it, right? So that's what I'm looking at.
I'm trying to post our live on Twitter, but Twitter is saying that I'm over my limit of sending messages.
Oh no!
But
Elon is after you.
Yes, but it's the first one I'm posting today.
Oh my God, no!
I don't know. Okay, not a problem. Not a problem. Okay, that's it. And let's take a look on the majors. What's your view, Jose, on Euro USD, my friend?
Yeah, I mean, when you look at basic currencies, the ones that people trade, most traders and audiences look to trade to make a living, This whole thing, it's bearish I mean, the weekly is bearish, monthly is bearish. This thing is bearish, man. This thing is bearish. I'm not saying it can reverse. Hopefully it does, because if China does well, Europe goes up. That seems to be the current relationship so far. If I look at levels, the real question here is if we can stay above 104.54. Yeah, I think like if you look at 2015, this is the range we're trading, right? So I want to be a buyer around these levels, 105.08, and I want to make sure I go to the middle of the range. So that means at some point I should be trading about, this is almost 2000 pips, sort of. Yeah. So basically 2000 pip, I will say about 1000 pips. I think fair value for the euro will be 115. 115 will be the fair value. So I want to be a buyer, everything that gets close, very close to 104.75, because of this range that comes from the bottom of March 2015 and all the high at March 2018. And after that, everything is just the pudding here. The reality is that the success for you to place a trade, if you're not day trading or you're not into swing trading, the reality is that this will be very attractive one more time at the 104. And from that point, I'm definitely looking at least 1,000 points going all the way back to 115. The reason is, like I said, we don't need another year where the dollar is very strong. It's not good for emerging markets. It's not really something that is attractive for anyone. So I think the dollar, it's ready to show some weakness. That will be good for, I think, the US trade deficit. That will be important. But at the same time, we'll give some volatility, because a lot of people, when the dollar is very strong, it sends bad vibes about the world economy. Strong US dollar, very bad for economies, because it's telling you that there's a little bit of risk off. People are not really comfortable, right? They don't feel good putting money to work. So that's why the dollar is strong. But in this case, again, euro dollar, I want to be long. I want to take a position. I can start buying now, but I want to go heavy if we get any close to 105.10 or 104.75 for the euro dollar.
I have something to add to this. Why I think you should not buy right now. And let me show you.
Yeah, let me stop my screen. Go ahead.
Okay. Where is here? Oh, so I was looking again. Can you see my screen? Okay.
Yeah, go ahead.
So we have, I was looking, so we have this signal for Euro USD by exhaustion. And this one is interesting, and I will explain you why. Why is this and why this is important?
Right.
You have to agree with me that big players or big speculators or commercials, people that trade not the currency but trade goods, they overall they remain the same. So you have the same players around the years, so same banks, same stuff. What I'm saying with this is it's in average, the money that we have on these markets, they remain the same because we have the same players. Sometimes one player wins, sometimes another one, and this money going change from hand to hand. And so this creates another metric that we can take a look, that is the open interest. So it's how many positions we have opened on this on a specific asset. And so why it's important for us to know that we have mainly the same players, because we can pay, we know that if the money it's average the same, we know the power, the buying capacity of each of these players combined. So we know that they, in average, they open for example, 1,000 contracts of euro. After this, they have to take profit because they do not have more money to continue buying. Got my idea?
Right. Yeah. Makes
So
sense.
it's like if you have $1,000 and you spent it, and now you have to start making profits. So when we see contracts going above, open interest going above this threshold, we can expect these positions to get closed, and we may see some profit taken. And it's exactly what is happening right now. Can you see here on USD? So since October, mid of October, so let's take a look on mid of October, USD. Okay, weekly. October, yeah, right here. So since this date, these guys have been increasing their position above the previous threshold that they used to buy. So
right, exactly.
Okay, so this makes me think that yes, we see this rise, and so but this money, it makes me think that it's leverage money. So they have to sell it to
unload it.
Yes. So maybe we can see some profit taking. I don't know how much, because it's not trivial to say, but let's say we can even go back to one. But one thing that we will know is we have to keep following the COT data, and when this open interest come back below, let's say below 800,000. Okay, so maybe after this we may see the USD rising again. So this is going to be the best time to start looking for longs. But right now, I think we are going to see some kind of stronger pullback, as you said. But after this, yes, we can see more upside. But this is not good news for Europe. It's not good news. They have this not having a strong currency against USD. But let's see. So right now, I'm going to wait on this trade. I don't know you, Jose, if you are.
Yeah, like I said, I can always add, this depends on a lot of stuff, leverage, size, and everything, right? That's very important to understand. But like again, very close to the bottom range of that area, all the way from 2015 is where we actually had the big value. Not now, of course. The big money, we have to wait. I mean, we're 1,400 pips from the low, right? But also one thing to remember is strong dollar is not the way to go.
Yes, I believe it.
So strong dollar is not the way to go. So whatever is happening, I totally agree. After a 1,400 pips, which is for, just to have some sense, if you actually buy one standard lot, you're talking about from the low to the high, $14,000 in profit. That definitely is something that someone's going to take profits. Profit taking will be on the table. And we're talking about, as far as the currency itself, it's a 15.45% increase. The last time that whole thing happened, if you look in the history of the euro, I think one happened from December 16 all the way to September 2017. You have a little bit, you have one that went from, I mean, the COVID low all the way to, yeah, actually all the way to January 21st. So it took about a year for a 14% move to the high. Same happened again, January 2017 all the way to September 2017, about, 9 months. But now you're getting 15% move to the upside from September
This was
to
for
January. Yeah, to January, September. And actually just the last week of September. So it's October, November, December, January. So what used to take 9 months, you're getting it 4 months.
Yes.
That's huge. And that's a problem. So there's a lot of people who don't see that, and you can get caught in the narrative. But buying euro right now, it's a little bit tricky. Now look at this. July 2012 to March 2014, for the whole thing to move up 15%. And for example, from May 2010 to November 2010 for 20% move, that took about what?
This one?
Yeah. No, the one, yeah, in 2010. Let me see.
Yes.
2010. Yeah, that one, that same. That's an anomaly, right? And then you have another move. In
20% on the currency.
It's too much.
Yes.
And then you have crazy moves when the euro was all beat and it was going up in 2005. It moved up 36% against the dollar. But the reality is that the 15% took about November 2005 all the way to December 2006 to move the euro 15%. Back in the beginning of the 2000s, it took about a year. And then the problem of the story, I'm not saying it's not going to go up. I'm just saying that 15% in 4 months is pretty fast.
Yes.
Pretty fast. So it has to pause. It has to cool down. My preference for position traders, someone that, want to have this like a cash account and everything, I will start buying all the way around 104.60. 104.60, 105, right there. That's a sweet spot for the euro dollar to go long.
So you are talking something around right here, around here. 104. It's right here.
Yeah,
that's
right
good.
there.
Yes.
That's the value area right now and that makes a lot of sense historically speaking. That's the trade that we should pay attention to.
Yes, and maybe this is the point where the profit taking will end and these guys will start adding again. That makes a lot of sense. It's good.
Yeah, pretty much.
Let's see if we have something else that is interesting. See, CFA GPI. Do you trade this?
Not much.
Yes,
Nah, the Swiss franc against the Japanese yen. Not really, man. Not that much.
But let's just take a look to see, because anyone else has this cross currency code data that we have. Yeah, but this is a weak signal. Yes, this is all related to Mexico, and yes, we don't have. Yes, most of the signals that we have, it's because of Mexico. Let's see if we had some big change on contracts. Yes, let's take a look on cotton. I don't know if I have cotton here. Yes, but nothing relevant too. So I think, Jose, from my side, that's
yeah,
it.
for today. Yeah, for today,
Yes.
That's it. I mean, we can come back next I mean, not every week we're gonna have tons of trades to put out, tons of ideas to put out. So I think for today, Lou, it's great. It's always good to connect with you. We're gonna make sure we have on time. So YouTube, give us some love as well. And people know that we're gonna be here next Wednesday at the same time. Closing bell. We're gonna go over, see what's happening. If there's anything for earnings season, which I think earnings season in the US is gonna be over. I think most companies, believe it or not, they came up with some good figures, some strong players that are probably going to rally if the market reverses, heading to 4,300 points. Tesla above 200 again. They have this big announcement on March 1st. Is going to be streamed live on Twitter, of course, and YouTube. So you can imagine no one is going to miss that important day, and it's going to get people excited. And I think this is going to produce more buy-ins into the stock. And that 105, that psychological 100 level, now it's a very, very strong level for Tesla investors. Absolutely very strong level. And they're going to defend that level for the foreseeable future. And I think it's good. I mean, Tesla investors now, they weathered the storm. They came out better than any other of the mega caps. When was the last time anyone heard a mega cap put in? Dude, it was like 95% in 4 weeks.
Yes, that's crazy.
That's man. I've never that doesn't. I mean, it was probably what Amazon and all these companies they used to be, right, back in the days. It's just ridiculous, man. The level of this company is something super crazy. And I'm looking at the different levels on my systems, and the buying has been slowing, but the pressure on the side of the call buying has been crazy. Like everyone is targeting 180. Like there's a guy that today just bought $3.8 million. He bought the 180 call dip in the money for January 17, 2025. That's 2 years in the future, man. That's just crazy stuff.
Yes.
But it shows you people are risking, the people are allocating capital, right? And they're betting on that. They're betting on sustainable move that the company will be worth more than $180 in the next 2 years. So that's a lot, and I think we can talk about that a little bit more about that next week. But that's $3.8 million, man. That's a strong commitment in where this whole thing is heading. Absolutely strong commitment, and that's very positive. That's extremely positive, and that's one thing. The other thing, for example, why the market is not dropping is like when you look at Microsoft and the advantage that they're taking over right now above Google, the reality is that people are buying. Just today, just to give you a sense of what happened today, someone bought $197 million of Microsoft around $273. And someone else added $309 million around $266. What that tells you, right? It tells you that there's a strong commitment in these big companies. People are not just buying. I mean, people like to invest, but they're not going to buy whatever, right? They're going to buy something that matters, something that really matters, something that has profit, something that can weather the recession, something where I can take my cash and buy something strong, something very strong. And the reason when you think, and this is just for us to go, the reason that you think, okay, why people are doing this, why people are buying Microsoft, is because people say like, oh, you know, I hear this a lot on CNBC and all these shows. Last year, Microsoft went from 349 to a bottom of 212. That's a 40% drawdown, right? But it did that after it delivered from the COVID lows. It made 164%. So that means even with a 40% pullback, you're still, compared to that level, you're still up 60% in 3 years. But that's Microsoft, man. And I'm pretty sure some people took profits in the top, right? So my bottom line is I mean, you still earn profit. If you bought that bottom, you know, you can attempt to make 65% of your money, or you reverse to the COVID lows and you have a 30% risk. And if it moves lower, you have a 55%, which if you think about Microsoft, man, think about this. Microsoft back in the great financial crisis, okay? It went from a high in November, on November of 2007 to the low of the crisis, 60% drawdown. My point is, people are actually adding money now because worst case scenario, if I buy now and I have a great financial crisis, disaster, I will actually have my money down 50%. But that's Microsoft. It can make a comeback.
Yes.
There's some companies, Leo, that will disappear. They will disappear. That's it, man. Thank you, man. Appreciate it. It has been great. Great to connect with you. Let's get ready for next week. All right.
Okay, that's it. Thank you, Jose. I was, while you were speaking, was looking this Microsoft chart, and it's amazing.
Yeah, it's very strong.
I appreciate your time, your views, your insights. Thank you. And next time.
Thank you so much, man. Appreciate it.
We're doing this 10 p.m.
Same time.
Okay. Bye-bye. Thank you.
Bye-bye. Thank you, everyone.
Guys. Bye.
Thank you, guys. Take
See you
care.
next week. And Jose, let me just say my Twitter. It's Leo. How do I say this in the correct English? Leo,
you can put it on the screen. You can pull it up.
Let me share this. Share my screen. Okay. Can you see it?
Yeah, we have your screen. There you go. You have at Leo Hermoso.
Yes. Oh,
that's on.
I'm going to put this on the video description. I think it's wiser. That's it. So, Jose, see you, my friend. Bye-bye.
Thank you.
See you next week.
Ciao, ciao.